And when did you come to this conclusion? Was it a gradual process, or did you was COVID your point where you said, okay, now this is it? This is the tilting point?
Honestly, I've been thinking about it well before COVID.
Okay.
I think though with COVID, what COVID did was it changed the game because it allowed people to in practice, government policymakers to do fiscal in size without any really restraints. And it also allowed, importantly, the population to receive fiscal largesse for really the first time. In the United States, when they first sent out checks right after, in March or April of 2020, maybe it was May, I can't remember, but when they sent out those checks, a lot of people thought, I had conversations with people, they're like, well, should I send this back? Don't they need the money? Whatnot. And as that they don't need the money and they're not going to run out ever. Right. And so it was just but the average citizen didn't really understand. And in fact, the government really didn't have any good apparatus for just sending out checks.
Yeah,
they had to sort of figure that out.
Yeah.
Like, how do we actually send out a bunch of checks?
Yeah.
Right? They had to figure it out on the fly.
Right.
So people got the checks, and I think people thought, well, I've got these checks, and well, I guess I'll just spend it, right? Or I'll save it, or I'll put it against debt or whatever. But I think most people, by and large, at least spend a portion of it.
Yeah.
And then we did it again.
Right.
A few months later, we sent out checks again.
Yeah.
And then we did it again. Right?
Yeah.
The third time. And now on Wall Street, 3 times is a trendy. 2 times is, but 3 times definitely is, right? So I feel like that people, getting those checks, they understand. They're like, wait a minute, this is all right. I like this. I like getting checks, right? And I think it's very interesting. It's a different prescription than what we've done before. And if you look at the counterfactual of what would have happened to our economy and world economies had we not sent checks out, I think it would have been much, much worse. And I think everyone knows that, right?
Oh, I think there was a reason. Think back to how bearish everyone was in the March COVID lows.
Sure.
And the reality was the reason they were so bearish was because they didn't anticipate the government doing the fiscal.
Right.
And they probably weren't wrong. Right. Had no fiscal come,
it would have been very bad.
Yeah.
I
probably would have headed a lot lower. All those bears would have been right.
Yeah.
And where they fell down was missed, forecast was they didn't understand that the fiscal that was coming. And to be fair to them, we've spent years being told that we couldn't do it.
Right.
Like the Reinhardt and Rogoff book telling you that, no, we can't do it.
Yeah.
And now we got a situation. Okay, so you were already, though, leaning this way. Mm-hmm. And you were leaning this way because I guess after decades of seeing lower and lower rates, but really the credit going to the elite few or the people with money as opposed to that. So you almost would say, or am I correct in that you would say this would have triggered at some point for some reason? We just couldn't go on the way it was.
Yeah, I feel like that, honestly, like the way these things typically change is some big event.
Right.
That's what, and it finally just shifts people's expectations.
Yeah.
But because I was, I used to use this analogy. I'd say, imagine if you're a king in Europe, and I'm really sort of picking on Germany and sort of the fiscal austerity framework that they have.
Yeah. Okay.
Right. Which was to me, it is, and it's honestly, it was literally the opposite thing of what you probably should have done. After this long debt deflation that we had, after the financial crisis. I mean, you probably made it a lot worse than you needed to make it.
For sure.
Literally doing what they did.
Yeah.
So, but if you just sort of take it out of context and you say, okay, imagine if you were a king in the 16th century,
okay,
and your finance minister came to you and said, okay, there's all these people, they want to give us money to do stuff. And, the crazy thing is they're actually going to pay us to take the money. So you say, well, what are you crazy? Like, what do you mean they're going to pay us? Like it's a negative interest rate. So they're going to pay, we get the money and then they pay us to take the money.
Right.
Right.
Yeah.
And And then the king would say, well, does it matter what we do? No, you can do anything you want.
Yeah.
That's the way it is.
Yeah.
Like, how long would it take the king to like take all the money that he could and then spend it on armies and go and rape and pillage or do whatever, right?
But he is German, though, so he might not.
Well, maybe not in Germany, but most kings, I think, would have
For
taken
sure.
the money.
Yeah.
I mean, they may have taken the finance minister and said, you need to go and be in the stocks because you've lost your mind. But I mean, it's sort of this weird sort of Alice in Wonderland world. It's like,
Yeah.
just take the money.
Yeah.
The bond market is begging and screaming you to take the money. It's negative interest rate. They want you to take it so bad, they were paying you to take it.
I know.
Take the damn money and use it. So I think that's where we are. In COVID, people were like, well, we can take the money and spend it.
Right.
And then when they did it, people were like, well, man, this isn't so bad.
Yeah. Now, do you worry, though, like I always say, the government can fill the hole, the COVID hole, but I almost feel like that they might have filled it a little too much. And that's what we're seeing with some of the inflation. Obviously, we have some supply issues as well, but maybe we did a little too much. And now we're seeing for the first time a return of that. Larry Summers got to balance the budget, and you see some of the Democrats headed, not as willing to spend. And do you worry that we're going to slip back into, let's just say, the Clinton Democrat, who was it, Rubin? That was, let's stop spending, and so that'll do better. Do you worry that that's where we've headed back for a little while?
I think it's possible. I don't think it's very, I would bet that we continue to do some stimulus. We may do less than maybe they would formulate it to begin with. Now, there's a political process. Remember, people say up front, I want X, when they really want X minus, right? Whatever that is. So to start off with $3.5 trillion doesn't mean you think you're going to get $3.5 trillion, right? Maybe it means you think you're going to get $2 trillion or 2.5 or whatever. In terms of this latest reconciliation bill. And then, of course, you've got the infrastructure on top of it. I think the Democrats would like to do some stimulus. I think they would like to extend child care credit. I think they'd like to do other things. And I think, my view, I think they'll figure that out in some form or fashion and get that done over the next, 3 or 4 months.
And do you think that will be enough for what the market is discounting? Like, do you think that they will
I don't think the
or...
market is particularly optimistic about that,
right.
number one.
So do you think it'll exceed market expectations?
Well, I think any deal probably right now exceeds market expectations.
Yeah.
I feel like people are sort of talking about it, but nobody, until you really see what's happening, nobody's really, I don't think, discounting it too much. I also think there's a fair amount of pent-up savings that's out there, and there's clearly a wealth effect as well.
Right.
But there's a lot of pent-up savings from people. But I think there's a bigger point to the point you're making here, and that is that as market participants right now, we're primarily focused on COVID and after COVID. COVID, we're through. We're in COVID. Somewhere, getting through it or whatever. And what's going to have after the COVID? And people look at supply chains and they're saying, well, this is just because of COVID and whatnot. And they're ignoring the last decade of debt deflation, which Reinhart and Rogoff also talked about.
Right.
This time is different.
Yeah.
Right. Which they were largely right about, the fact that, after a financial crisis, that the world takes a long time to heal.
Right. Like they were right because they convinced everyone to not spend anything.
Well, that didn't help,
Yes.
right? So maybe they made themselves
That's right.
Okay. But the reality is clearly with austerity, you make it worse, in my view. So, but if you think about the last 10 years and you think, okay, so let's look at housing starts, right, though, over the last 10 years. This is pre-COVID. You had 3 industrial recessions. You had a financial crisis and, second sort of financial currency crisis in Europe with the ECB.
Right.
In the EU, then you had, a 2.5-year trade war just preceding COVID. So there was a lot of stuff going on, especially in the industrial economy, the sort of the value start of the economy, right? They had a period of slow growth. You had the whole oil issue where people, were fracking, and then they refinanced them, and then they blew all the money again, and so that we had a lot of issues during that period of time. But the big overlying issue was that things were basically slow because regular people didn't have any money after the financial crisis. They lost their jobs.
Yeah.
Some of them lost their houses, their assets. A lot of people, look, everybody talks about the stock market now. Look, a lot of people sold.
Right.
In 08 and 09.
Yeah.
They got out because they were scared. they were losing their house. Some of them lost their savings, their house, all that. Their credit went bad. They lost their jobs. There was a lot of pain.
Yeah.
And meanwhile, banks who had financed all this stuff, with 30 times, 40 times levered balance sheets, they didn't have any capital either.
Right.
And so one of the reasons the Fed had to do QE was to rebuild the bank's capital. And so you had banks rebuilding their capital. You had consumers rebuilding their balance sheets. These things take a long time.
Okay.
It took a decade.
Right.
Right? But as I say, time heals all wounds. Right? And with the COVID stimulus and all the other stuff, we're back. Like, banks' balance sheets are best they've ever been in history. Consumers have fantastic balance sheets. They're the best they've ever been. Look at the NCOs from the companies that are reporting, the banks reporting the charge-offs this week. So if you think about, this last 10-year period and the next 10-year period, what if the next 10-year period is actually a regular period, and the last 10-year period was actually a subnormal low growth period?
Right.
That in actuality, supply chains were optimized for this low growth period, and now they're having to optimize for a regular growth period that's just a normal period, a way things should have been without a financial crisis.
Right. Okay.
So we went up and then we went down, and now we're going to normalize again.
Right.
So I mentioned housing starts. So to go back to housing starts, we averaged 900,000 housing starts from 2010 to 2020. The decade before, we were at 1.5 million, 1.6 million a year.
Right.
So if we just get back to where we were that decade, we're short 6 million units housing.
Yeah.
So people say, well, housing prices are up. Well, of course they're up. Where are we going to come up with 6 million houses? Because that's what we got to come up with. By the way, I'm not adjusting for population. I'm not adjusting for all the demographic changes.
Right.
Right? I mean, the millennials are having kids.
Yeah.
Right? And by the way, they're moving out of apartments. And what do they want? They want houses.
Yeah.
So it's a different world, and everybody's focused on COVID and what the supply chain effects are with COVID, but they should be thinking about this from the last decade. This decade is very unlikely to be like last decade. And the big thing that you're talking about, that people aren't talking about, is the fact that not only are we not doing fiscal austerity, like, the absence of a negative is one thing.
Right.
We're literally doing the opposite.
Yeah.
And not only are we doing the opposite, we're doing the opposite in size, unprecedented in size since World War II.
Right.
In some cases larger than World War II. And not only are we doing it, Europe's doing it, Japan's doing it, China's doing it. The whole world, the developed world is doing it.